Hello everyone and welcome to this webinar. My name is Lucy Moore and I'm Professional Education Manager at ACCA. Our session today is designed to support your preparation for the Management Accounting or MA exam. And I'm really pleased to be joined by expert tutor Steve Willis.
Hello everyone, my name is Steve. Welcome to our webinar. I'm happy to be here with you, sharing tips and technique to help you pass the Management Accounting exam. I'd like to first say congratulations for starting your ACCA studies. I'm an ACCA member, and I can tell you it's helped me greatly in my career. So please stick with it. Put in the work, get the letters after your name, and I am sure it will help you in your career. Well, I'm coming to you live from Czech Republic here in Central Europe from PwC, where I work as a trainer in the Business Academy, and I've been helping people like you pass ACCA and other exams for about 20 years now. And you might have also seen some of my articles. I write articles for Student Accountant Magazine, for Teach Accountant Magazine, and I'm also a Microsoft certified trainer and a Six Sigma Green Belt. I also do some work in process improvement in addition to training ACCA. Well, again, I'm glad you're here. Thank you for taking the time to join us. This webinar is for anyone who has decided to take the MA exam. And I'd like to bring you up to speed on what has changed in the syllabus, in case you've been studying already for a while. And I also have chosen some topics that are difficult. My students struggle with them, other people struggle with them, and I want to get you started on these topics to save you time and help you guys get a pass when you sit MA. Throughout the exam, I'll be sharing with you loads of exam tips and exam technique advice. Okay, so guys, let's get started. Looking forward to it. Question for you. If you can please find the group chat window and look at this weird machine on your screen. Hi, Peach. Hi, Sandra. Some of you have found the group chat already. I'm going to give you 30 seconds. I'd like you to type into the group chat what you think this strange machine is. And I'm looking in the group chat. Tell me what you think it is. Give me a guess. What do you think, Natasha? What do you think, Mohammed? Neil, Barry? A projector. Not quite. It's not a projector, guys. Nope. Time machine. I wish it was. Not a projector, Fez. Keep guessing. All of you think projector. Tape recorder. You're getting closer. It is a haha, Katie, you've got it. Everybody, round of applause for Katie. Guys, we are looking at something very old. We're looking at the first digital camera ever created. You wouldn't think that it's so old. It was made in the 70s. And it was actually made in the company Kodak by a research and development team. However, when this machine was presented to the board of directors, the directors said, this is a wonderful toy, but our core business is the production of film. If we produce a digital camera, no one will buy our core product and we'll go out of business. So we're not going to make digital cameras. And that is a great example of the innovator's dilemma. If we would like to grow our business, we have to go into new areas. However, we risk making our current areas of business obsolete. Now, guys, this is the kind of business problem that we look at in paper SBL, Strategic Business Leader. We talk about corporate failure in advanced performance management, the big brother of this MA paper. And the topics that we learn on MA carry forward to both of those papers. And you cannot properly pass SBL or APM or PM or financial management without an understanding of these core topics. Okay, so that is one of my other objectives. I want to introduce to you these core topics that carry forward to your higher level studies. Now, let's get started, guys, talking about the syllabus changes. What is new? Now, there's nothing seismic. There's no major restructuring of the syllabus, okay? The core is the same. You are still responsible for the nature and the sources of management information, right? The building blocks, the raw material for management accountants, for consultants, for auditors, for managers, for business leaders. So you need an awareness and appreciation and understanding of management information. And you learn about that in MA. Okay? Now, how do we turn raw data into information so we can make decisions? Well, in MA, we look at regression analysis. We look at time series. We look at standard deviation. We look at the Z-score. Very useful tools. None of that has changed. Okay? Now, the bread and butter of management accountants, cost accounting techniques. How much does it cost to produce one bicycle in a bicycle factory, or to provide 1 hour of audit services here at PwC? That's cost accounting, and that's a big part of MA, management accounting. Now, budgeting. 2 areas of budgeting are still in the syllabus. Capital budgeting, okay, using discounted cash flow techniques. Investment appraisal, okay? And also the preparation of a functional budget for financial control. All of that still in the syllabus, okay? Now, standard costing and variance analysis, that is still there. Unfortunately, some of you are probably thinking that is one of the most challenging topics. I'm going to get you started on variance analysis today. Last but not least, measuring performance, okay, from financial perspective, from a non-financial perspective, using some well-respected strategic models to help us. So the core of the syllabus is the same. What has changed? Well, it's the first area of the syllabus that has been expanded, okay? Sources of data has been expanded, and summarizing and analyzing data has been expanded. Now, this is a timely update. When I'm teaching ACCA courses nowadays, this summer, I've been in the building or online teaching ACCA courses. In the next room, other auditors and professionals at PwC, my students are in the other room. They're learning about data analysis. They are learning how to use Microsoft Power BI. So this is a very relevant evolution in the business world. So it's good that this is in the syllabus. Now, let me give you a quick tip on employability. I know if you're doing MA, you are very ambitious about your career. You're looking to grow fast in the world of business. Think about developing a competency in data analysis as well as ACCA. And if you can learn about Microsoft Power BI, business intelligence, you will be an employability powerhouse, okay? So that's just a little side tip. Guys, look at this on the screen. We are looking at Tesla, the electric car company, founded in 2003. They launched their first electric cars in 2008. popular company. I believe it's the most valuable automotive company now that's out there. They are the ones that made the electric car a sexy mobility device. Okay? Now, think about the company Tesla, based in California. Think about their sources of information. The leadership at Tesla, they need information to decide what model of car. Engineers there are using information to design engines. And now in 2014, they even launched avoidance systems, okay, using all kinds of sources of information to help the drivers avoid accidents and collisions. So right now, friends, in the group chat, tell me all of the sources of information that Tesla has at their fingertips. Claire, Sajil, Mohammed, Natasha, what are the sources of information for this company? Anybody? I'm looking in the group chat window. Help me out. GPS, wonderful. Karen says the GPS of the car, the financial database from their sales, the customer data. They've got a lot of customer data, the market data. Artificial intelligence is transforming the data, okay, into wisdom to help people make decisions. You guys, all kinds of great stuff. The geo data, the maps, okay? Oh, Tesla is also monitoring the news. I'm sure they're looking at all kinds of feedback from the news, from social media, okay? Great. Guys, you know sources of information, internal, external, GPS. Guys, what's new in the syllabus, okay? 3 new sources of data. So, machine and sensor. Guys, that's the data that is coming directly from the car itself. It's telling its velocity, the battery level. It's telling the GPS location, the speed. There are sensors in the engine looking at the temperatures, okay? So machine and sensor, anything from a machine sensor. Now, transactional sources of data. This would be anything from the invoices, from purchase orders, from delivery notes. Okay, all of this information would be in their ERP, their Enterprise Resource Planning System. You guys are on fire with your sources of data. Wonderful, wonderful, great stuff. And then the last new source of data is human and social. So now companies are scraping through social media, through Twitter, through Facebook, through Instagram, okay, gathering insight about the opinions, customer satisfaction, trends. So that's something new. You need to know this, new sources of data. Guys, who uses Google Maps? Give me a plus symbol in the group chat if you are a user of Google Maps. Word of mouth. You guys are great with the sources of data. Well done. Who uses Google Maps out there? I'm going to guess all of you. Yes, we all use Google Maps. My children, who are my little children, take it for granted now. They've never known a world without Google Maps. Guys, this is a company that is using big data. Big data is in your syllabus, but the definition of big data has been expanded, okay? So let's have a quick look at that, big data. Well, characteristics of big data, types of big data. Guys, you know the V's. The V's of big data. This is a tool, okay, used to evaluate why big data is big. Okay, what are the advantages of big data? How can a company use big data to achieve competitive advantage? Well, the first 3 V's you are probably familiar with if you've already been studying for MA. You know about the volume. You know there are 1 billion Google Map users every month. When you are using Google Maps, your phone is sending your velocity, your direction, your GPS location. You're clicking stars on restaurants you visited. Maybe you're putting photos up, okay? So the volume generated by big data is immense, now measured in terabytes and petabytes. These were theoretical ideas when I was in university some years ago. Now it's real life. Velocity, the speed of the transactions and the transformation. You're traveling down the street and Google Maps all of a sudden tells you there's traffic, make a left turn here, we found a better way for you. That's also the wisdom from big data, and companies that can do that fast, okay, that's an advantage. Of course, variety. You've got the GPS, you've got the photographs in Google Maps, you've got the speeds, okay? Visuals, pictures, words. So many types of data. Big data is working with a broad range of data types, variety. Now, guys, the new V's that you are responsible for, value and veracity. So value, we need the benefit of using the big data to exceed the cost. So Google is a very profitable company. They turn the big data into advertising revenue directly in Google Maps and indirectly in other Google products. And then they have application programming interfaces, right, an API. If you are a software developer, you can buy the Google Maps API and then use that as well, okay? That's great, Karim, if those are in the book, okay? Now, last one, veracity, you guys. Can we trust the output? Think about Tesla's big data. With their avoidance software, they have to be able to tell if it's a paper bag fluttering in front of the car or it's a person. So, veracity, can we trust the output for making decisions? Can we trust the data source? Imagine if we're trying to scrape a data set for customer insights. If we're looking at a third-party database of Twitter, I might not trust that data source. I would prefer to use Twitter's actual database. Okay, guys, so those are the 5 V's of big data that you are responsible for now. Guys, types of data, you probably know this. Unstructured, semi-structured, structured. Unstructured data. When I am preparing to teach advanced performance management, I will be doing a keyword search on a big file, a big folder of PDFs. That is using unstructured data. Okay. Now, structured data, any data source, right, that is in tables with columns and rows. If your data is in SAP, if it's in the ERP, it's most likely a structured source. Semi-structured, it has some level of structure, but we do need to do some massaging then to get information out of it. For example, comma-separated value text would be semi-structured. Okay, friends, my message to you is that sources of data and syllabus area A has changed a little bit, okay? It's been expanded. So my message, everybody, is to use an updated study material, okay? make sure for your upcoming exam, you're working from the latest exam kit at least, so you are practicing the right questions. Alrighty, team, that's it on the updates to the syllabus, okay? It's nothing seismic.
Steve, would you mind, sorry to jump in, but would you mind if I just added something before you move on? Because I had a couple of questions through from students, which made me realise that in how I've set up this session, I've perhaps not been completely clear. So obviously this is an on-demand exam and students may well be sitting MA between now and September, which is when the syllabus changes come into force. So if you are sitting an exam, if you're sitting MA next week, anytime throughout August, then what Steve has just given an overview of, you don't need to worry about, okay? So it's from September through to next August that those syllabus changes apply. Thank you, Steve.
You're welcome. Thank you for the clarification, Lucy. Guys, the updates are a little bit complicated, but remember, you do not need to write essays on these topics. Remember, the exam is objective test. So they will give you closed questions about these topics, right? Not open questions. Let's now, guys, I'd like to move to the core topics from management accounting that I would like to spend the rest of our time introducing. Now, I chose these topics, okay, for several reasons. First of all, these topics are the language of business and accounting. At work, I use this terminology, I use these ideas on a regular basis. And many business discussions, these concepts are used. So when you master the MA syllabus, you're going to be in a special club of people who can now participate in technical accounting discussions, okay? So it's a really wonderful thing, I find. Now, these topics that I've chosen, they are developed further. They're developed further in MA, in the management accounting syllabus. You use these ideas again and again and again. And they are also assumed knowledge in the higher papers, okay? In performance management, in SBL, in advanced performance management, you could bump into these ideas, these topics. Okay, so let's jump in, guys. We will cover cost classification, behavior, and then we'll look at some exam questions. We're going to get started, okay, with a lighter topic. Then moving into marginal versus absorption costing, two different approaches to understanding a company's profit. And lastly, I'm going to introduce you to what many people find the most difficult topic in MA, and that is variance analysis. Okay, so let's jump in with cost classification and behavior. Guys, I've got a photograph on the board, black and white photograph, a photograph from the olden days, okay? This photograph is capturing a moment in time from the traditional manufacturing environment, okay? Right about the turn of last century, the steam engine had been invented. We have specialization of labor. It's in this era when the modern concepts of cost accounting, of management accounting were first defined. So this is where the MA paper begins. And it's important to have a strong grasp of these fundamentals, because what we do in performance management, what we do in advanced performance management, they're all evolution. It all is evolution from these traditional concepts. So you really need to know these basics that I'm going to take you through. Now, friends, as management accountants, as professionals in finance and accounting in business, we need to be able to discuss, to evaluate the costs of an organization, okay? So, friends, I'd like you to tell me in the chat window all of the costs that you see in this photograph, any way you want to define them. What do you see here? I'm looking in the group chat. I'm looking for your ideas. What costs do we see? Fabulous. We see labor. We see a workforce there. We see materials. Wonderful. We see raw materials. Check it out. We see the rent. We see the overheads. Okay? You guys are on fire. Doing great. We see production costs. We see some production expenses. Okay? There's probably some electricity in there. Okay? Maintenance costs. Wonderful. Production, labor, materials. Well, great. Make sure that you arrange these ideas in a certain way. The first way we can look at these, right? Production versus non-production. Okay? And someone tell me, what is a production cost? Someone in the chat, tell me what a production cost might be. Guys are doing great there in that group chat. Well, friends, as you know, many of you know, production costs, and we have to define it without using the same term that I'm asking you to define. Guys, production costs, all of the costs associated with bringing the raw materials to the organization and turning them into finished goods, right? So all of the costs, transforming, bringing our finished goods, our raw materials, turning them into bicycles. You guys got it? Non-production, everything else. Finance costs, administration costs, distribution costs, selling costs, okay? Now, tell me this, guys. How about the storage? How about the storage of the finished bicycles? Is that a production or a non-production cost? Can anyone tell me? How about the storage? We're storing the bicycles before we sell them. Production or non-production? Thank you. Non-production, everybody. That's a distribution expense. Remember that. That is often a distractor in the objective test questions in MA here. Okay, now, right, direct, indirect. Direct costs, easy to trace to a cost unit, right? In this company, the cost unit, the smallest unit of goods or service to which we assign costs, right? That would be the bicycle, right? So the direct costs would be the direct labor, the direct materials, right? The time of those workers there. We can easily see the hours it takes to make a bicycle, the amount of steel tubing that goes in, any direct expenses, okay? As some of you said, those were the prime costs as well. Indirect, those are the costs that are difficult to trace to the cost units. And you guys mentioned some of those, right? The heating, the lighting, the rent, if we're paying a salary for a supervisor, okay? Now, Sana mentions work in progress. Okay, that's a category of inventory. Okay, and in management accounting, we deal with work in progress and process costing. Okay, and how about cost center versus cost unit? Yes, a cost center, an area of the business to which we assign costs. It could be the IT department here in PwC. It could be the HR department. It would be the production department in this company, or cost unit. Okay, I mentioned that. That would be the bicycle here. So far, so good. You guys are doing awesome. You are very smart MA students. Let's keep moving. I want to get to some exam questions with you as fast as we can. Guys, now look at this. This is a question. And strangely, when you study cost classification and behavior, it's easy, but there can be difficult questions. When I do this question on my course, most people get it wrong. Everybody, I'll give you 30 seconds. If you can please give this question a try. I'm running the timer. Let me know what you think the correct answer is. Okay? Let me know the correct answer by putting a letter into your group chat box. Okay? B, wow, you guys are doing great. D, maybe it's selling. Maybe it's production overhead. Maybe it's admin. Excellent. Guys, this is what an MA question will look like. All of you will be served different questions in a different order. This is an example of a theoretical question. The theoretical questions tend to take less time than the numerical questions. So when you are presented with a theoretical style question like this, it's usually a good idea to clear it, okay? If you get a difficult numerical question, and it's difficult because it has many rows, it has many columns and rows, well, you could flag that one and come back to it later. Well, guys, people have trouble with this because they don't read carefully. And there's a key word here. Can someone please tell me the key word in that description? Guys, what is the key word? Somebody tell me, what word leads us to the correct answer? Anybody want to tell me? The two, cells, that's not the one I was looking for. Inventor, nope. Per unit, yes, you guys who said per unit, you guys got it. It's per unit. Remember, you must read these questions very carefully. These questions are written by a team of experts. They are checked by 4 levels of review, I think it is. Every word is there for a reason. Guys, if something is per unit, it cannot be an overhead. Overheads are indirect, difficult to trace. So right out, we can cross out C and D. Overheads are not per unit costs. Guys, give me a plus if that makes sense, that you see we can eliminate overhead if a cost is a per unit. Guys, a plus symbol lets me know that you understand, right? Look at that, I'm typing pluses into the group chat. Thank you, it is a variable cost. Great, okay? Now, direct is the best answer. I want you to remember this also. When you are doing these theoretical style questions, okay, don't look for the perfect correct answer. It might not exist. What you need to do, eliminate, and then Once you have eliminated, you go with the best answer, okay? So you're looking for the best answer by elimination. Now, I think most of you know this, so this will be a very quick review. You know a variable cost, fixed costs, semi-variable costs, stepped costs. Variable cost, everybody. As you know, the behavior of the variable cost is this. Mustafa, going back to that previous question, well, if you read it again, the words were selling and manufacturing, manufacture and sell. So selling expense is not accurate. The best answer was a direct, okay? Because it's easy to trace to a cost unit. That's why it's the best. So, you know, a variable cost increases in direct proportion to the production. What are the variable costs in the bicycle factory, guys? Tell me the variable costs in the bicycle factory. Someone tell me that. Direct material. Thank you, Angela. Direct material. Raw material. Direct material. If we produce no bicycles, we don't use any direct materials. Direct labor. You guys got it. Okay? Fixed costs. Fixed costs. Give me an example of the fixed costs, everybody. Give me an example of the classic fixed costs in that bicycle factory. All of your direct costs, your variable costs are great. You've got the direct materials, you've got the direct labor. Rent, there it is. We make no bicycles, we make 100 bicycles, we pay the same rent. Semi-variable. Now we have a fixed component and a variable component. This would be my mobile phone bill. Guys, I've got my mobile phone here. I pay a monthly charge on my mobile phone, whether or not I make telephone calls. When I start making calls, I start getting a further charge. Commercial electricity is often a semi-variable. There's often a monthly connection fee, and then you pay for the electricity. Great. Stepped costs. Okay? Stepped costs. Hey, you are right. They didn't have the mobile phones back then. So my example didn't come from then. Thank you for that. Okay? Let's look at stepped cost. Okay? So at a certain point, if the bicycle factory would like to produce more bicycles, we need to run a night shift. Right? So now we have to hire a night shift supervisor, or we need to rent a second delivery truck. Okay? So a stepped cost is a fixed cost that increases at a certain level of activity. Now, everyone, again, this is an easy-ish topic, it seems, right? It's straightforward, but the questions can be difficult and tricky. And now, back here, guys, we were looking at the total cost behavior. Remember, we can also look at the per unit behavior. Now, imagine our rent is $100. If we produce one bicycle, the rent per bicycle is $100. If we produce two bicycles, the rent per bicycle is $50. If we produce 33. Guys, the fixed cost per unit decreases as activity increases. The variable costs were the direct material, Ayesha, the direct material and the direct labor. The more bicycles we make, the more we pay for rubber for the tires, the more labor hours we pay. Okay? Guys, another name for that behavior is economy of scale. Spreading the fixed costs over our units. It is a powerful force in business. It is a barrier to entry in many industries, okay? We could never make a furniture, I couldn't start a furniture company with my friends because the raw materials, the cost of the raw materials would be more expensive than buying a finished chair at ACCA. A big global company like ACCA, they have such economy of scale. I could never start a furniture company. They block other people from entering the industry. Variable cost stays the same, yes? Okay? The variable cost per unit. If one bicycle costs $10 labor, 2 bicycles is $20, it's still $10 per unit. Okay, now have a look at this question, guys. This is a classic type of MA question, and it is a graphing question. Everybody, I'll give you 30 seconds. See if you can get this one and give me the answer in the chat window. Kim, you have a good question. Can a cost be variable and an overhead at the same time? In the vocabulary of management accounting, and sometimes in the ACCA questions, we see the word variable overhead, okay? To me, that is a little bit imprecise, but people use it all day long. When people say variable overhead, variable expense, to me is a better way of saying that because overhead by definition is an indirect cost. So if someone ever says a variable overhead, they mean a variable expense. Okay, for example, if I'm running a special machine in my bicycle factory and I can measure the electricity use per operation, that is a variable expense. If I run a bakery and I bake my bread with an electric oven, and if that oven has an electricity meter and I can measure the electricity that I use, then the electricity there is a variable expense, okay? The heating and the lighting would be the fixed overhead part of it, right? So it can be either. Okay, guys, these graphing questions are tricky. In order to successfully do the graphing questions, you need to carefully read the scenario, okay? And we're talking about raw material. You cannot answer this question unless you see that we're talking about raw material. Everybody, is raw material a variable or a fixed cost? Is raw material variable or fixed, friends? What is it? Help me out. Raw material, variable or fixed? That's right, it is a variable cost. So you need to circle, or well, you can't circle it on your computer-based exams, right? You can't circle it, but you're going to identify on the screen that the line has to start where the vertical and the horizontal axes meet, right? So right away, we cross out B. B is no good. Now, make sure that you bring a straight edge with you into that exam center. Bring a clear plastic ruler. And you can put that clear plastic ruler on the computer screen and we can eliminate A. Look at that. A is becoming a semi-variable cost, guys. A is becoming semi-variable. And there's no mention of paying a flat fee at a certain point, right? There's no mention at a certain point we pay a flat fee and a lower cost per unit. Nope, A goes out. So you guys were all right. You were doing great in your elimination. You get it down to C and D. Now, look at that. D stays as a variable cost. We can check that by extending that line to that point. Okay? So, which is the right answer, everybody? The right answer, as many of you said, is D. Okay? D is correct because the discount applies retrospectively. Once we cross the threshold, all of the units, including the ones already purchased, the price gets lower. Okay? In C, it's only the units that we buy above the level. Okay? So D is correct. Most of you got that. Okay? Constant, thank you. There is another key word there. Let's try one more question, then we're going to jump to the next topic I'd like to do with you. Guys, this is a past exam question, and this is quite a difficult one, okay? Have a look at this, guys. What do you think we're going to do here? Which two types of cost are semi-variable? Someone give me an idea. What can we do here? How can we solve this one? Any idea? What can we do? Cost per unit, Seng, you got it. We don't even need high-low method. We do not even need the high-low is too much. The high-low would only be necessary if we needed to get the actual variable or fixed cost. Okay, so all you need to do is get a unit level. Okay, if you can get me the unit cost, you can answer this question. Guys, I'll give you 1 minute. See if you can get this. Get me the cost per unit and tell me which is semi-variable. Semi-variable means it has a fixed cost in it, right? Semi-variable means fixed component. Guys, you've got 45 seconds left. Guys, you're on fire. You're doing awesome. So if we divide by units, look at this. We can see T1, the cost per unit is dropping. So there's got to be some fixed cost in it, right? If the cost per unit is constant, there's no fixed cost. It's pure variable. The same thing over here. Okay? I'm liking T1 and T3 as the semi-variable. T2 and T4 are 100% variable. Okay? 1 and 3 have the fixed costs. Guys, does that make sense? Give me a plus if that makes sense, everybody. Give me a plus if you're happy with that. Wonderful. Good work, everybody. Now, moving on. Have a look at the picture on the board. Does that look different to you? Does that look different from the previous picture, guys? Does that look different from the previous black and white picture? Mustafa, if the cost per unit, yes, the answer was A, everyone. The answer was A. Let me go back to that quickly. Guys, if the cost per unit is dropping, that means there is some fixed cost in it. Remember we said that? Fixed cost per unit drops as activity level increases. We said if the rent for the rent is $100, rent per bicycle, if we produce one is 50, one is 100, two is 50, right? So T1 and T3 have a dropping cost per unit. That means there must be a fixed cost in there. That means it is semi-variable, okay? If we come back here, I think that this is interesting. Look at this. In the modern world, we see some changing cost structures. Tell me, what is different? What is higher? Are overheads higher or lower in the modern environment? What's happening to overheads, everybody? Guys, the indirect costs are increasing as a percentage of total cost. Indirect costs are increasing. Overheads increasing, everybody. That means it's more difficult to control costs. Guys, in the performance management syllabus, we get into the advanced and the modern approaches to cost accounting. And we cannot do that discussion unless you are a master of cost behavior and cost classification. Guys, I'd like to move now to the second topic of today, marginal versus absorption costing. Guys, when I teach this course here at PwC, when I'm teaching this course at PwC, this is the first chapter when people start getting really frustrated, okay? The first part of the course goes well, but right here, it starts getting difficult. I would like to talk about the core differences between these approaches. And we use both of these approaches in all of the higher performance management papers. So you need to know these topics, A, to pass the exam, B, so you can pass the higher papers as well with less pain and suffering. Okay? Marginal versus absorption costing. Guys, in business, cash is a fact, profit is an opinion. Okay, that's an important thing to remember. Okay? We have non-cash expenses. We have changes in IFRS. We have different ways of valuing inventory, okay? So important to recognize that. And we are going to look at two approaches, okay, to calculating a business's profit. Now, let's look at marginal costing. And let me tell you a little story, okay? A little story here to help you understand it. I live in Prague, Czech Republic. I have an imaginary business. I have a little kiosk next to the busy metro station near my marginal. We'll talk about all of this in a minute, Joby. Hold your question for a moment, please, okay? Guys, that's my kiosk, and I sell my smoothies for $1 per glass, okay? Very simple business. Now, if I share the cost structure with you, look at this. I have a variable cost per unit, 55 cents, okay? That's how much I buy the bottled smoothie from my distributor. And I have my rent of my kiosk is $775, okay? And I have a budget of selling 250 smoothies, okay? Very simple business here. In marginal costing everyone, okay? Critical to remember, to understand the idea of contribution. And if I look at my business at the unit level, I know my price, I know my variable cost. The difference between those two is my contribution per unit. Everyone, you need to know that idea. Contribution per unit. The selling price, then from that price, I've got to pay my variable cost. That comes out. What's left over is my contribution to my fixed costs. And then once my fixed costs are covered, it's contribution to profit, everyone. And I can look at this in monetary terms. I can look at this in percentage terms. So here we can say contribution is 45% of the price, okay? Now, that's a nice distinction. Thank you. When you come into this topic a bit deeper in your studies, we're talking about production and non-production variable costs, okay? Production and non-production, anything that is variable, okay? Mohit, thank you for that. Now, when I want to understand my profit for a period, as you know, a profit, okay? I have my revenue, I have costs, the residual amount is profit. I am classifying everything into variable and fixed. And I need to work to a total contribution line. Now, this is a very powerful approach to calculating profit when we are making short-term decisions. Okay? With this information, I can calculate my operational gearing, as Kei Chung has told me, okay? The percentage of my total costs that are fixed. That's about operational risk. That doesn't come up until advanced performance management, by the way, okay? One second, guys. And this is a template. These are two templates that you need to know cold for doing exam questions, okay? So we know under marginal costing that our P&L looks at sales, from which we subtract total variable costs to get total contribution. From our contribution, we subtract fixed costs and get to our profit line. Let's try another question, okay? Now, look at this. Is this a numerical question or a theoretical question? Numerical or theoretical? This one is numerical, okay? Some of them might take more time than others. When you are practicing your exam, your questions, after you've done your studying, you need to get into the habit of recognizing if a question is more difficult or easier, okay? If it's a really difficult looking question, like a variance analysis question with many, many rows, with 7 or 8 pieces of information in it, that's one you might flag and come back to later, okay? If it's a shorter question, if it's an easier topic, maybe you do that one on the spot, okay? So we're looking at a numerical question, so it's going to be very important to carefully read, carefully understand what we're looking for. So I would like you to start by reading this. You don't start by reading that big story. And what was the total contribution earned in the period? If you see that word contribution, and Arbin, you have got it perfect. Arbin is on fire. He's already got it, okay? You need to deploy a template or pro forma. And you need to remember sales minus variable costs is total contribution, minus fixed costs is my profit. So guys, we could get to the contribution line in many ways. We could add fixed costs back to profit. We could subtract variable costs from contribution. But I will give you a tip. If you can find the number of units that were sold, can you find the number of units that were sold? Can you find the selling price? If you can find the selling price and then you find the variable costs, you can calculate the contribution per unit. If you know the total units sold, you can get total contribution. Guys, go for it. I'll give you 1 minute. See if you can get this, okay? See if you can get this one. You guys are killing it. Look at that. You found the price. That's right. You found the price. You found the 4 variable costs: direct materials, direct labor, variable production overheads, variable selling. Fixed production comes out, right? That's the overhead absorption rate that we'll talk about in a minute. So, friends, the way I do this very quickly, I know I need the contribution line, and I know the contribution per unit, price minus the variable costs. I know that we're selling 800 units. 20 minus those variable costs is $5. $5 times 800 units, guys. Total contribution of $4,000. Look at that, guys. This looks like a difficult question on first glance. There's a lot of information to process, but you need to start at the bottom. Okay, what is that requirement? What are they asking? Total contribution. If there's any template or pro forma to deploy, jot that down on scratch paper, if you're allowed to use scratch paper, or use the scratch pad. Write that down, the notepad, and then use your next template, right? The contribution per unit, price minus variable cost. And you can then get the answer, okay? So make sure that you are practicing these past exam questions from an approved publisher's exam kit, as well as just reading the textbook, okay? Because this is just as important. Practicing by questions, by doing questions. I didn't get to profit. I did not get this to profit. So I'm not gonna go to profit right now on our webinar. Maybe it does, but that would take me a little bit of time to check. So the answer, everybody, is C. Can I get a plus in the group chat if that made sense? Question. Why do we take out the fixed production overhead? Guys, the fixed production overhead is a fixed cost that does not change if we sell 0 units or 100 units or 1,000 units, that is the same, does not change, so we ignore it. Now, I'm going to explain to you in a minute why that fixed cost is hiding at the unit level, right? Why is that hiding at the unit level? Well, spoiler alert, it's from the overhead absorption rate, right? We're going to talk about that shortly. Guys, here's a fun little mathematical puzzle. Here is a fun little mathematical puzzle. Have a look at this one, okay? Friends, you're having a look at this, okay? Osaka, those were distractors. We didn't need those to do the question. We could do it a more complicated way, but the name of that is a distractor, when they give you information that you might not need for something. Ludmila, you're multiplying 800 by the selling price. That's the revenue. To get to the contribution, you're multiplying it by the contribution per unit, right? Guys, to do the question on the board here, what's the effect on the company's contribution? Well, contribution, as you know, is this template again, okay? Again, this template. Now, look at this. We know the percentages here. We know the contribution is 40% if variable cost is 60%. Guys, does that make sense? If we know that the variable cost is 60%, we can then determine that contribution is 40%. Now, what did they say changes? The only thing that changed, everybody, is the selling price, okay? So if the price goes up, that becomes 110, okay? 110 minus 60, that doesn't change, so it goes to a 50, guys. If the price goes up, contribution goes up by the same amount if the variable cost does not change, right? So the 40 contribution goes to a 50. It goes up, right, by 25%, everybody, because it goes from 40 to 50. And that is 1.25. So it is contribution goes up 25%. FC, fixed cost, everybody. FC is fixed cost. VC, variable cost. Okay, guys. That's another example of a question that is rather tricky based on a standard pro forma or template. It says that everything else will remain the same. Jacob, it says other costs and will remain the same, okay? Other costs will remain the same, everybody. Carefully reading all of the words. Guys, time is running short. Let's move on. Let's move on now. If you're a little bit confused by this, you can watch the recording and you can try this again. Let's now compare this to absorption costing. Now, have a look here. I have a friend. My friend's name, so the answer is D, everyone. Yes, going back to that, the answer was D, 25%. Okay? So let's move on to absorption costing. And I have a friend. My friend's name is Wesley. Wesley owns a business manufacturing bicycles, and his rent is $100 per month. Everybody, rent is a fixed cost, as you know. Wesley has a plan, a budget to sell 10 bicycles. Everybody, is that clear? His rent is $10. His plan is to sell 10. His rent is $100. His plan is to sell 10 bicycles. Okay? Now, look at his cost structure. Okay? Look at his cost structure. We've got a price of $25. We've got a variable cost of $13. We've got a contribution. That gives me a contribution of $12. Everybody give me a plus in the group chat if that's making sense to you. Everyone give me a plus if that's making sense. Great. Now, my friend Wesley is thinking of a promotion. He's going to drop his selling price by $10 in order to increase demand. Okay? He still has positive contribution, so he's not worried, because as long as he has positive contribution, he is contributing to his fixed costs. Okay? Do you guys see a problem with this? Do you guys see a potential problem? Anybody see a potential problem here? That's right. If he doesn't greatly increase his activity level, he's not going to cover his rent, right? He's not going to make any profit. Guys, so marginal costing helps me when I'm making short-term decisions. But for long-term planning, I need to use an overhead absorption rate. This is a tricky topic. This gives many students trouble. Overhead absorption rate. This is a mechanism in accounting. This is the basis of absorption costing, guys. This is the basis of absorption costing, not marginal costing. And in absorption costing, we create the overhead absorption rate, which is the budgeted fixed costs divided by the budgeted units. Okay, the budgeted bicycles. So if we are using an overhead, an absorption costing approach, we will create an overhead absorption rate, and we will assign the fixed overheads to the bicycles. Okay, so now we can say when we produce our bicycles, it's going to also cost $10 per bike to cover the overheads. So under marginal costing, I recognize a cost per unit of $13, right? That is the variable cost per unit. Okay, that is the variable cost per unit. If I am using absorption costing, I recognize the overheads, and my cost per unit then would be 23, not 13, 23, okay? So under the absorption costing approach, I work with profit per unit. Under marginal costing approach, I'm recognizing contribution per unit. The fixed costs are a monthly cost. Give me a plus sign if that makes sense. Can I get a plus sign in the chat window if that makes sense, everyone? If you can recognize the difference there, under marginal costing, it's $13, variable cost only. Under absorption costing, we include the fixed overheads. Great. Okay. Now, why is this important? Why do we care? Well, let me show you a problem. Okay, look at this. A customer walks in to the fixed overhead, that's the 100 divided by 10 bicycles. The fixed overhead absorption rate, $100 divided by 10. Okay, a customer walks into Wesley's business. Okay, a customer walks into Wesley's business and he says, I would like to buy one more bicycle. I've already bought a couple from you, but I'm only going to pay $20. Okay? So, my good friend Wesley, he says, wow, you drive a hard bargain. Let me decide if I will sell you a bicycle for $20. Okay? And on the back of a napkin, he goes into his accounting records and he discovers that the cost per unit is $23. Okay? He discovers the cost per unit is $23. The selling price is $20, so he's making a loss of $3, and he says no. Okay, I will not do that deal. Okay, I will not accept that price. Everybody, was that a good decision? What do you think? Was that a good decision? Yes or no? Was that a rational business decision to reject that offer on financial grounds? You guys think yes? I would challenge you on that. I would challenge you. I would say the way to do this, the revenue from earning one more bicycle is $20. The revenue from earning one more bicycle is $20. The cost of producing one more bicycle is $13. Okay? So fixed costs will not change if we produce and sell one more bicycle. Okay? Fixed costs will not change. So we will get a positive contribution. So $7 is better than no dollars. Okay? So now we just have to ask the question, what'll happen to the market? If we charge $20 to this guy, everybody will want $20, okay? So we have to then look at some other marketing ideas, but on financial grounds, the price was fine. And everybody, that's the core difference between marginal and absorption costing. Marginal costing, we will use for these types of decisions, okay? short-term decisions. And marginal costing is critical in performance management. Absorption costing, that's going to help me with long-term planning. When I produce 10 bicycles next month, I've got to cover my overheads or I will go out of business. Okay? I disagree on the volume. If we have sold 9 bicycles or 11 bicycles, more contribution is better than 0 contribution. Okay, friends, that is a quick comparison between marginal and absorption costing, okay? Now that you might have a better grasp of those topics, I'd like you to go back into your materials, okay? Look at those again. And when we meet again, I will give you some more questions that I will put into my YouTube channel, and we can solve more of these questions together, okay? So go back and study. In 2 weeks, we can come back to this and do some more questions. Marginal costing is only about the incremental cost. Thank you, Kei Chung. That's right. The cost of producing one more. Friends, our time is running a little bit short. I would like to jump ahead now and get to standard costing and variance analysis together, okay? My channel, everybody, if you go into YouTube, Steve Willis, ACCA, we do not have time for activity-based costing, okay? When we meet again, I will give you some more stuff in my YouTube, okay? Guys, one final thought on marginal and absorption costing, okay? Just the one last idea here. Under marginal costing, when we have fixed production overheads of $100, it's easy. $100 fixed costs goes to the P&L as a monthly expense, okay? It is a period expense, as some of you said. Now, under absorption, and inventory is valued at the variable cost per unit. Under the absorption costing approach, guys, the inventory, the fixed costs first get parked in the inventory valuation with the overhead absorption rate. So if I produce the 5 units, look at that, $100 is spread to my inventory, right? So we look at the fixed cost per unit. And then look at this. If I sell 2 boxes or 2 units, only $40 of fixed overhead will go to the P&L, and the remainder will go to the statement of profit or loss as an asset, right? The unsold inventory is holding those production costs. Guys, that is the core difference right there between marginal and absorption costing, okay? Guys, we're short on time. I'd like to introduce you now to one of the most difficult topics in MA. And the $60 goes to the balance sheet. It goes to that's the inventory. That's the closing inventory. So the closing inventory has the fixed production overheads parked there, okay? The statement of financial position. Guys, last topic before we say goodbye. Wesley has a new division. Wesley has started making scooters because scooters are so popular. Okay? And Wesley had a budget of $100 contribution. Wesley's budgeted contribution, $100. Okay? For the month. For the month, $100. Now, why is he stressed out? His actual profit, friends, not profit, excuse me, contribution is lower. Okay? Guys, this is what variance analysis is all about. Helping answer the question, why? Okay? What went wrong? Standard costing variance analysis, it is a classic tool. It is used around me in business. My clients use it. Standards are everywhere. A restaurant will have a standard cost for a meal. McDonald's will have the standard time to prepare a Big Mac. An auto mechanic will have a standard time to change your brakes. Okay, so this is a difficult topic and it comes up in all of the other performance management papers, so you need to know it. Variance analysis, guys, it is a traditional tool of control. We ask what should happen. We then find out what did happen, and we try to take corrective action based on the concept of standard costing. This was developed, introduced in that mass production era, okay? And when we are following standard costing, the management of the company, right? It's a top-down approach. Production manager, purchasing manager, looking at our records, looking at the forecasted costs of our raw materials. Okay? We'll set a standard cost per unit. This is one of the reasons this topic was difficult for me. I remember when I did the management accounting exam many years ago, I got very stuck on this topic. It was just doing my head in. I didn't get it. Part of the reason was the vocabulary. I want you to remember, standard cost card is simply the budget for one unit, for one scooter. Okay? And we always need the standard cost per unit when we're doing a numerical variance question. Now, once we have the budgeted cost per unit, we can then use that for our budgeting process. If we plan to sell 100 units in the future, we can then multiply 100 by the standard revenues and costs. Okay? Now, you will see in your textbooks when you study a very complicated standard cost card, but it always boils down to this. Okay? A budget for one unit. Have a look at this for a moment. My standard contribution per unit is $10. Standard price is $15, and I have two variable costs, materials and labor. Now, I cannot draw on the screen, but I'd like to bring to your attention, the fact that both variable costs have two components. The amount of something, right? The amount, the kilos or the hours, and then the monetary value per rate, right? So we have 125 per kilo, 10 per hour. You're going to find that in your books. That's very important. Everybody, give me a plus symbol if you are with me so far, that standard costing begins with a budget for one unit or one scooter. This is called the standard cost card. Everybody with me, give me some pluses to let me know that you're still there, you're still following. Okay, wonderful. Now, we have to set a standard. My friend Wesley has to decide how difficult should he make the standard. How challenging should he set the standard time per unit? Okay, now, this is a topic that can easily come up in your exam. It is a theoretical topic, and there are 4 approaches to setting a standard. Okay? Wesley can look at his records. Wesley can say, 20 years ago, when I started my bicycle factory, it took 2 hours per unit. To this day, I still use 2 hours. Guys, that's a basic standard. Not very good for control, okay? It's not good for motivation, because I'm sure after 20 years with the learning curve, the workers could go faster, but they won't go faster if the target is unchanged. Okay? Wesley could also use an ideal standard. Okay, that's a standard that assumes perfect working conditions. That's the standard that we would use if we were a basketball team and we had Michael Jordan, right? How many shots would we make, etc. Not very good for control because it's unachievable. Excuse me. Now, the current standard, that's the best one on the board so far. That is the best one on the board. Our workers can already do the current activity. We look at how much time it took last year. We look at how much time it took last year, and we set our standard there, okay? However, if we would like motivation, if we would like performance improvement, an attainable standard, where we're using challenging but achievable assumptions. If we challenge our workforce with a target a little bit more difficult than what they can currently do, they will have to change their behavior, okay? They will have to change how they work. They'll have to work faster, more efficiently, okay? That is what we're looking for when we set a standard. Now, we can try a past exam question just with that information. You guys are looking at the board. What do you think here? What do you guys think? Theoretical question, okay? Remember, every word in this question has been chosen, is there for a reason. It's been edited by numerous people, okay? Wow, you guys are doing great. Do you like the first statement, people? What do you think of the first statement? Basic standards provide the best basis for budgeting because they represent an achievable level of productivity. You like that one? No, I don't like that. What's wrong there? That's not the best. It is achievable, but it's going to promote underperformance. If we are just using outdated targets and standards, it's not going to drive innovation. It's not going to drive performance improvement. It's not going to motivate me. Do you guys like the second statement and the learning curve? Do you guys like the second statement? What's the problem with the second statement? Problem with the second statement, yes, they are short-term targets, but it is not a useful approach for control, okay? So the answer, everyone, is C. Okay, guys? Now, friends, we're running a little bit short on time. I wanted to do one more thing with you here. However, it's going to be too rushed. So I'm going to propose, I'm going to make a nice YouTube video for you next week, and I'm going to take you through the rest of the introduction here, okay? Because I want to get you started on this properly. But right now, I would like to talk about your next steps as an MA student, okay? We've had a look at cost behavior. We've had a look at cost classification. We looked at marginal versus absorption costing, and I got you started here on variance analysis. So let's look at your next steps. All right, all of you have different personal circumstances. Some of you are busy at work. Some of you are busy with a family. Some of you might be students with a bit more time. Whatever your circumstances, make an objective of sitting and passing paper MA, set an exam day, and make a study plan. You need to be doing something every day. Make a structured approach. At lunchtime, you can do 2 objective test questions. You can get up an hour earlier every day and do 1 topic. Okay? You can block your weekends for study practice. Make a study plan. It's one of the most useful things you can do. And if you have the approved content, if you have the approved study manuals and revision kits, they give you lots of tips on making study plans. Okay? So really, make a study plan. These topics are quite difficult. Marginal costing, absorption costing, process costing, variance analysis. Those are some tricky topics. Make sure you give extra time to those 3 topics. Okay? Process costing does not carry forward to performance management, okay? Just to let you know. Marginal costing, absorption costing, variance analysis do. Guys, very important, if you're going to spend any money on your studies, buy the latest revision kits, okay? If you're doing your exams after the cutoff point for the new syllabus, I think that's in September, as Lucy told us, make sure you have the right revision kit for your exam date, okay? Now, it's very important as well, get into the online specimen exam, Okay, there is an online version of the exam that you will take. You can practice with the exam functionality. You can do the questions. You can practice time management. There are also extra objective test questions. There are also practice exams that you can purchase. More practice exams. So there are wonderful resources there. And we have provided with you the MA Essentials document. Print that out. That's going to tell you what I'm telling you here and give you more great information. Okay, there it is. Keep a positive attitude, friends. Visualize success. Let's say you're stuck on a difficult topic and you're really frustrated. Put that topic away, go do something else. Remember, the MA syllabus is very broad, okay? The section A is going to test everything. You know, one topic is not going to mean the difference between passing and failing. Make sure that you study the syllabus holistically. Guys, next time we meet, I'm going to continue with variance analysis. I'm going to answer all of your questions. We will look at more exam questions. We'll look at the exam approach. We will look at more exam technique, okay? And I will answer any questions that you have on other topics as well, okay? Friends, at this point, we've got 15 minutes left. Let me see if I can answer your questions. Okay.
Hi, Steve.
Hi, Lucy.
Hi. So, right, we haven't had too many through to the Q&A box just yet. It normally picks up once we start asking questions.
Okay.
I wanted to say a couple of things. Right, firstly, to remind those of you still on the webinar, if there is a question that you'd like to ask Steve, please do it through the Q&A tab, not the group chat function, because it's just it moves so quickly that it's very difficult for us to get back to a question once we see it come in. So please do pop any questions for Steve into the Q&A area. One thing I'd noted down to ask you about, Steve, was using up-to-date learning materials. We had quite a few students asking how important that is. I think you've covered that off already. Yeah. Something to just ask you to do before the end of the session, if it's okay. Sure. And perhaps you could. I'm about to give everyone on the webinar a bit of a reminder about your next session and how they sign up. Whilst I'm doing that, could you pop the link to your YouTube channel in our team chat area, and then I will send that out to everybody listening, just using the Q&A. There's a broadcast function you can use on the Q&A.
Yes, so I will do that right now.
Excellent. So everyone listening, I will share the link to Steve's YouTube channel just while he's providing me with that link. He's mentioned that there's another webinar that's coming up on the 3rd of August. Steve's also talked a little bit about what he's going to be covering in that webinar. I'd really encourage you to join if you're not sitting the exam before then, of course. There are 2 ways that you can sign up to that within this webinar platform. So if you go to the resources section, there is a link to sign up for that follow-up webinar there. And you should also be able to see it somewhere else on your screen under there's like a call to action tab, which also includes the registration link for the next session. So I have Steve's YouTube channel link, which I'm going to provide you all with in a second. Let me just have a very quick look. Steve, a question that we've had, which I'm not sure really whether you can answer, but I've seen it coming up in both the group chat and in the Q&A here, is roughly what amount of time should a student allow to prepare for the MA exam? What's the average time of learning?
That is a very difficult question to answer because it is such a personal question. Yeah. Some people that I work with here at PwC, the people study for 2 weeks and they take the exam, okay? And that is in a very pressurized situation. They have time off from work. They get a course, they're doing mock exams, they're studying, they're learning. But that's not really practical for everyone, okay? If you are working, it's gonna take you longer. So I would say 4 to 8 weeks is a window that works for many people. But I wouldn't extend it too much further, because then it's easy to start putting things off and you will have forgotten things that you learned earlier. Okay, so that is a window that is used by many people that I have worked with. That works.
Okay, great. Thanks, Steve. We've had a few technical questions in. We've had one just in now asking whether all companies use absorption or marginal costing, or both.
That's a wonderful question. Now, when a company is preparing financial statements, the statement of profit and loss for external users, okay, under IFRS, that is the absorption costing approach, everyone. So a company is reporting to external stakeholders under IFRS using absorption costing, okay? Inventory is valued at full production cost, okay? However, in a company, we can then also use marginal costing for internal decision making. So here at PwC, I could be with my colleagues. We could be thinking about the cost of running a course over the weekend, a controller course. In order to make that decision, we're going to think about what are all of the fixed costs, what are all of the variable costs, what contribution will we get, what's the break-even point on that course. So we can use the marginal costing approach internally for decision-making. We can use it on any segment of the business as well. We could look at a costing for one product. We could look at a costing for a department or the business as a whole. Okay, so companies can use both approaches at the same time, guys.
Okay, brilliant. Thanks, Steve. And another question, and you know me, you know I'm not technical, so if this overlaps at all, then apologies. But another student is asking, why are marginal cost and absorption costs used in the standard cost card calculation?
The standard cost card, everybody, is a tool for management, an internal tool of control, right? It's used for driving budgeting, and it's our option. We can use a marginal costing approach, or we can use an absorption costing approach. Just that is an arbitrary decision. Now, in performance management, guys, in the next exam, when we do variance analysis, we're doing it mostly under a marginal costing approach. However, when we're doing it in the MA, they can do it both ways, okay? So that is just an arbitrary decision. If we are using absorption costing, our standard cost card will include the overhead absorption rate, right? That's just how it works. So when you're doing your variance analysis questions, if the cost card has fixed overheads and they talk about profit per unit, it's the absorption costing approach, okay? If they talk about contribution per unit, it's the marginal costing approach. It's just an arbitrary decision by management, how they're gonna do their budgeting.
Okay, thank you, Steve. Right, we've got quite a few questions coming through from people listening still about the version of the study materials to use, and how important it is that you use up-to-date materials. Now, I don't think we can really say anything other than we've said, which it is, it's really critical that you do use up-to-date materials if that's possible for you. So if you're taking your exam from September onwards and you've been using materials which are relevant for the current syllabus year that we're in up to the end of August, then if it is feasible for you to do so, then please do visit either BPP Learning Media or Kaplan Publishing's websites, find out which materials suit you better. You can order the materials via there. If this is not possible for you and you are going to be using your existing study materials, then the absolute minimum that you need to do is engage with what the syllabus changes have been. So Steve has given an outline of that at the beginning of the session. You can download the slides from the resources area. In the resources section, we also have a really nice interactive PDF that gives you lots of information about what the syllabus changes are to all the ACCA exams in the ACCA qualification. And I would encourage you to download that. So if you are going to use your existing materials, you absolutely must make sure you're aware of about what the syllabus changes have been. Let me just have a quick look at what other questions are coming in.
Could I add one thing to that? One quick thing?
Of course, yeah.
Guys, the changes are in syllabus area A, okay? So that is what will be updated. And you can also go to Open Tuition and you can get a 20% discount on a revision kit, okay? So you got to study new Section A, syllabus area A questions. The rest of it didn't change, only syllabus area A.
Brilliant, thank you, Steve. Another question here. Asking whether this is realistic in the time we have, Steve, I don't know, but the student is asking whether it would be possible for you to go through the financial statement impact of marginal absorption costing.
Let me make a webinar let me put that into a YouTube video. We can't do that now. I need a whiteboard to explain that properly. We have 5 minutes.
Okay, that's fine. So everyone, I've shared the link to Steve's YouTube channel. He puts an awful lot of great material up there, so please go and explore it. And I'm sure that you'll find something to help you with whatever your specific area of concern is. Right, bear with me 1 second, just having another quick look at the questions. Okay, a few questions about, what's the best study approach, how to put together a study plan. Again, I think that's quite a difficult one for Steve to give a definitive answer on because it does depend on you as individuals. Is there any particular resource, Steve, that you'd recommend people have a look at to help them?
100%. Guys, if you get the BPP or the Kaplan revision kit, both of those have an introductory chapter, and they tell you how to make your study plan, what to study, when to study. So that investing in a revision kit is money well spent. They're going to help you right in the introduction make your study plan.
Okay, perfect. Thank you. Okay, we've got a few minutes left. We've had what I think is actually a really nice question, and it's quite a nice motivational question, I think, to finish on. It's not related to MA, but we have somebody asking how ACCA has helped you in your career. And I think if we just sort of think big picture about what people listening are, the journey that they're on, would you like to say a few words about being an ACCA member?
Well, I was invited in 2000, in the late 2000s to work on a USAID project in Central Asia. And I was brought in as an expert. And the only reason they even thought about me, okay, the only reason they even looked at my CV was because I was an ACCA member. Being an ACCA member lets them know that you have up-to-date technical knowledge. You also have practical knowledge about business. You have good business acumen, and it is a badge, a worldwide badge, okay, of excellence. And I wouldn't be here working with you guys if I had not started my ACCA journey. After that, I realized how much I love training, and so I started doing more training courses than project work, and now here I do mostly training now, helping you guys. So also, friends, the world is so turbulent right now. The role of the accountant is changing, right? With the changes in automation, business intelligence. If with the ACCA qualification, with those letters after your name, okay, in 10 years' time, the world will be a different place, but you will have a badge, right, of excellence, and employers will trust you for your judgment. They will trust you for your business acumen. They will trust you for your technical knowledge, okay? So it's a great thing being a member of ACCA.
Brilliant. Thank you, Steve. So I hope that's a nice motivational message to finish on. Just a few words of reminder from me before we finish up. So like we've said, Steve's got a lot of material on his YouTube channel. I have shared the link with all of you. That should have come through as an answer to a question. So I hope that you've seen that. And he's mentioned a couple of things that maybe we've had to skip over and give less detail on today. And he's going to make some recordings and add that to his YouTube channel. Second reminder from me is lots of you have been asking whether this session will be available as a recorded on-demand webinar, and the answer is yes, it will. You should be able to access this from as soon as it finishes. The link that you have, the link that you use to join the live session should just work for the on-demand recording as well. But in any case, we'll be sending you an email reminder tomorrow. And then the third reminder, really important one, is if you're doing your exam after the 3rd of August, then please do join us for the follow-up webinar, and you can sign up for that through this webinar platform if you have a look in the resources section. And please look at the resources that we've loaded up as well, because they are useful and we've added them there for a reason, because we feel they'll be helpful to you over the coming weeks. Okay, so thanks once again for joining us. Thank you, Steve. That was an excellent, really engaging session. And thanks to everyone listening for all of your participation. It's been fantastic. Thanks, everyone, and hopefully see you on the 3rd of August.
See you in some weeks.